Good afternoon, everyone. In today's video, we'll do a quick market recap using some of our free trading indicators. Keep watching to get a sense of where the S&P is currently at. All right, so we'll start by layering on a couple of our indicators. So here we have our market pulse indicator, which is free, and then we also have the accompanying utility labels, which gives us some nice labels along with color-coded values of some of the ETFs and internals that we care to track. Right, so we have the TRIN, we have the put-call ratio, and then we have our ETS, our general market ETS, and you can read the rest of the list. Now the color coding is gray or black if essentially the value is not important, red if it's signaling to us that we should be bearish, and green if it's signaling to us that we should be bullish, right? So now using those gauges, if we look at this almost like a speedometer, we're getting our put call ratio that has started to light up as red. And we see the value plotted as 0.71. Right? And so this is signaling to us that more people are bullish in the marketplace right now, also makes sense by this rally, and to start to be a little bit more cautious, either take profits quickly if you're looking in bearish position, in bullish position, excuse me, or start to look at potential pullbacks to our variable moving average or whatever moving average you care to use, right? But really, this gives you a sign to start to be cautious. Something else that's interesting is our transports, DJTs, also giving us that bearish signal. Energy is giving us that bearish signal, but there's no surprise there. But the one that I do think is semi-interesting is our financials, right? Even our financials show us that we should be a little bit more neutral, and if we can see this yellow turn to red in this upcoming week, then that can start to give us that domino effect in the put call ratio, which hopefully then starts to bring our market down so that we have a healthy pullback, and that becomes another trade opportunity that we can play. Now, something else that's interesting for those of you that use fibs in your trading is if you draw this high to this swing low, you can take a look that we've just made our 1272 extension, which also seems like a decent place to start to pull back. Now, keep in mind, however, we've also seen just these short squeezes where the market could very well continue to rally to 34.14 or even 34.62, and this put call ratio can stay in this bearish territory for a while. So this doesn't tell us any sort of time zone in terms of how immediate that is, but that's where we can start to use some of these clues of Fibonacci, even the V-score if we layer in that, right, which tells us we've been fluctuating between the second and third standard deviation line for quite some time. So a retracement back down from that range into the second and first standard deviation range also starts to make sense. Now, just because it makes sense doesn't mean it's going to happen. But I do think that doing this market update, hopefully it does help us start to take profits a little bit more aggressively. And then this is just in the back of our head in case we do get a nice bearish setup, especially using the volatility box for our members. But you can then start to take on a little bit bigger of a position anytime you get a bearish position, especially with those edge signal arrows, where you can start to have one as a runner to see if that runner does get you the pullback that this put call ratio suggests. All right, hope you all are having a wonderful weekend, and we'll see you in the next update.